Hello and to Maxwell's budget roundup, the autumn budget 2021. I suppose this is maybe part two. We had the spring budget earlier on in the year, and that laid out a lot of the provisions for the year, and this is maybe part two. Although with the amount of provisions that were leaked in the run-up to the autumn budget, perhaps it's actually part 4, 5, 6, or maybe 23. So we'll wait and see. But I'm just going to run through some of the major points in the budget. I'm not going to go through things in too much detail. I'm just going to go through the more salient points for you. And of course, as always, if there is anything that you want me to cover in more detail, then by all means, give me a shout. My contact details will be at the end of the presentation. Or you can get hold of me via the website maxwellsaccountants.co.uk at any stage. So, okay, without further ado, we'll crack on to Rishi Sunak's third budget. Okay, so right, so we start in the sort of the overview, I suppose, of what happened. So we had some business rates relief. We had some changes to pensions. We had some changes to capital allowances with the annual investment allowance, remaining at £1 million until March 23. And we had an extension of the 30-day capital gains tax reporting window, which was quite useful because there's so much misunderstanding out there. A lot of people don't even know about it. So the fact that it's moved from 30 days to 60 days was great. Other things, other measures, an overhaul of alcohol duty, cancellation of fuel duties, probably I think the 13th budget in a row where this has happened, something along those lines. Pubs supported with a reduction in draft beer and cider. It's obviously a big one in the West Country for cider. National living wage and national minimum wage rates increases across the board. Bit of a stealth tax there for the government, and air passenger duty. So we've gone into a number of areas, and there's a lot more as well to play with. So we'll start with personal tax. Personal allowance, £12,570 for the tax year. We're going to freeze that until 25-26, which gives us some certainty in terms of tax planning, I suppose. But it's a bit of a stealth tax there because, of course, with inflation, particularly inflation being very big at the moment, then actually we're not keeping up with inflation. So that's that. And we've obviously got the basic tax band rates that go up in accordance with that as well, and they're going to be frozen as well. So, again, right the way across the board, we're seeing a bit of a stealth tax there, and more people will sort of shift into both self-assessment and shift into paying additional tax at different bandings of tax, where they may have previously not done so. So that's the way that will work. Dividend tax, we saw in September that the new health and social care levy was announced, and we were told that this will also impact dividends. So we're aware now that the new rates on dividends for the basic rate taxpayer goes up from 7.5% to 8.75%, and for higher rate taxpayers 33.75%, whereas it was 32.5% previously. And of course, those who are earning £150,000 or more are now going to be paying 39.35% on their dividends rather than 38.1% previously. So that's what's happening with dividends. So agree with it or not, that's where we are. So national savings and investments product for green. So with COP26 just around the corner, this is part of the government's sort of drive to get us to be more green. And this is something that we can invest in. So if we've got spare cash, we can invest in a fairly safe product. I don't give investment advice, but this is a government product, so it's backed by government. So it's a government gilt, and it's fairly safe, and it's given 0.65% per annum over 3 years, and it's designed to invest into green investments. So there we go. There was the first one launched in September. There's been a second issuance in October, and that will continue. So that's that one. Universal credit. Obviously, we saw, there's been a huge amount of press about the £20 reduction, which of course was a temporary increase. The press will tell you that Rishi has actually only put 2 million into universal credit after taking 6 million out. And there's lots of headlines along those sorts of lines. But in fact, effectively, what this budget does is allow those that are working within the universal credit, but on the lower end of the earnings scale, to keep more money in their pockets. So it's the taper rate's reduced from 63 to 55%. An additional 8p for every pound that you earn whilst you're on universal credit. So good news for those universal credit recipients who are also working. And then we've got the normal minimum pension age, which is I think we're probably all expecting this. I probably imagine that I'll be working until I die probably, but probably till I'm 80, I expect. But we're beginning to see that rise. So that age has gone from 55 as it was previously to 57 from April 28. So if you retire after April 28, you've got to retire at age 57 or above. So yeah, that's where we are with pensions. Okay, so then we move on to the health and social care levy, and as I said, this was announced in September. This is basically it's kind of an emergency procedure to put in place. So initially, it's just been tacked onto national insurance. So in the first year, up to April 2023, we just see 1.25% tacked onto all of our national insurance classes, and that's the way it works. What we're then able to do, or what government's then able to do, is write it into the legislation more widely. And we're seeing a separate tax, a separate levy coming in from April 23, where this will also apply to people who are of state pension age, who are still in employment effectively. So it's not just the workers of the world. It's also others that are going to be faced with this as well. So that's where we are with that particular levy. We're still seeing that all of the allowances are on board for this. So the employment allowance, the £4,000, we're still going to be able to utilise that against the new levy as we are over the next year against the national insurance. And we're still, for those exemptions in place for apprenticeships, veterans within free ports, and those under the age of 21. All of those exemptions are already in place. They will also be exempted from the levy as well. So So that's quite useful. Okay. So we go on to the national minimum wage. Hopefully on your screen you'll see the new rates there. The big one there is obviously £9.50 for the national living wage for those over 23 years old. One thing to point out there is the £4.81 apprentice rate. Just bear in mind, if you are employing apprentices that who are over 19, that it's only the £4.81 only applies in the first year of their apprenticeship. So something that we see that people slip up at. They think, oh yeah, we can pay at £4, as it was previously 75, now 81, and we can pay them the apprenticeship rate. But if they are over 19, it is only for that first year, and therefore if we go over that 1 year, then we're suddenly not complying with national minimum wage. So just be very careful of that one. But you can see effectively the national minimum wage levies that payments which will go up 6.6% from the 1st of April 22. Okay, so we then move on to making tax digital, which is an interesting one for income tax. So the government are ploughing on through with making tax digital. They have given us a year, so they've delayed it mainly due to COVID, that people weren't ready, the revenue wasn't ready. It's been doing, it's been focusing on sort of the support programs, the furlough, etc. So it's moved away from making tax digital, but it's now back very much on the agenda. From the 6th of April 23, sole traders, self-employed, landlords with over £10,000 worth of rental income. So that's gross rental income. That's not profits. They will need to be reporting under making tax digital. They'll need some form of software to do this. And we move on to partnerships in April 24. April 25, sorry. It was April 24 that we is for sole traders and landlords. Corporation tax, we're expecting this to be April 26, or not any earlier than April 26. In fact, we're probably expecting that to be a little bit later. So if you are absolutely desperate not to do making tax digital, then maybe incorporation is for you. Which may be a bit of a drastic step to take. Just to avoid making tax digital, but there we go, it's an option on the table. All encompassing with the making tax digital journey is a transition of what we call basis periods, so sort of year-end dates. So if you make up your accounts on the 5th of April and 31st of March, then there's no concern here. You don't need to worry. But if you make up your accounts to any other date, then there is some transition, because we need to be, before making tax digital goes live, we need to be in a position where we are assessing the profits in the year in which you make them, not in any other year. So there are some rules, some transition rules, and there's some what we call overlap relief to play with things. Make sure you get in contact with your accountant about that as early as possible, really, because there's some planning that can be done there to really make that easier and on the cash flow, perhaps. Okay, so corporation tax. So we've known for a while, spring budget, that corporation tax is going up potentially for particularly those larger companies. Currently 19%, going up to 25%, with a marginal rate for those in the middle. So for those companies that earn between 50,000 and 250,000, then there's going to be a marginal rate of tax that will be between 19 and 25%. And if you've got multiple companies, or you are involved in different companies, so you're associated with a number of different companies, then you're going to have to split these thresholds as well. So, so it's another thing to think about when we talk about that. But if your company earns less than £50,000, then you're not going to see any change here. You're going to continue to pay tax at 19%. If you earn slightly more, 50,000 to 250,000, then you're going to pay slightly more. If you're over 250,000, you're going to pay tax at 25%. And this is from April 23. So there we go. That's corporation tax for you. What have we got now? I've got residential property development tax. Is an interesting one. New one, not massive for a lot of my clients, but a new 4% charge on those property development businesses making more than 25 million of profit. So those sort of larger businesses out there, we're going to start creaming off some of that money to put back into the coffers. Research and development reform. So the government is always keen for us to look at innovation. So they really do want us to do that, but they want us to do it without milking the system, I suppose. So they're looking at cloud costs. So when these rules first came in, cloud expenditure wasn't really a thing. So they're looking at bringing that in, and they're looking at the way to sort of refocus it towards innovation and then targeting abuse, which is something that they tend to like to do. Okay, they're looking at an online sales consultation. So they're looking at perhaps taxing Amazon and the like, which is probably no bad thing. Cross-border group relief. It's a post-Brexit thing. So yeah, basically we used to be able to relieve losses from not just within the UK. We now can't, but that's a consequence of Brexit. And then we've got this business rates review, which is interesting. So, and probably one of the biggest things to come out of the budget for businesses. So we've got a temporary business rates relief for the hospitality, leisure businesses, retail, 50%, which is going to really help them for 22-23 rate periods. So that's, I think that was fairly inevitable coming out of the pandemic, but that's going to be hopefully helpful to sort of kickstart some of the high streets. Freezing the multiplier, which affects sort of all of the businesses, and that's freezing that for 2022 to 2023. So that really helps rather than increase it by the usual multiplier and inflation, etc. That's going to stay down. So that's useful. There's going to be new relief to support investment in property improvements. So that's going to be welcome as well. To support green investment again, the COP26 agenda. So the government are going to go big on that. We've got something that's going to be a bit of an admin burden, certainly for the valuation office, is that we're moving from 5-year valuations to 3-year valuations. I think probably good for many businesses, particularly in a declining high street or a declining business district, for example, where valuations may be reducing. We often want those businesses to be revalued from a rates point of view earlier than perhaps they are. So great, and it just keeps the system a little bit more current. I think there's going to be problems with capacity there with the valuations office, but we'll wait and see what happens. And then we get to extending the transition relief and supporting small businesses, which again is a really vital relief. So again, we're extending that. So that's great. So good. move on to capital allowances. So capital allowances, we're extending the £1 million annual exemption, annual investment allowance, which is great. So that was due to end. It's now no longer going to end until March 23, which is going to be a help. It's going to be a boost to investment. So that's great. We also heard in the spring budget about the super deduction, which everybody got very excited about. Capes being put on and people, flying through the air and all the rest of it. So this is on new plant and machinery. So no second-hand stuff, although the second-hand stuff does qualify for the annual investment allowance, so we can use that. And it's and if it qualifies for the special rate pool, so long life assets, integral features, that sort of thing, then there's a 50% relief rather than the 130% that you would get with the super allowance. It's only available for companies. Effectively, what it does is it brings in the relief of a 25% corporation tax rate from 2023 to current day. So it's encouraging investment now rather than waiting for the future. So, but very welcome all the same. And then we've got the extension of the 100% first year allowances on zero emission vehicles, which obviously is the again the COP26 agenda. It's the green agenda, the electric vehicles, etc. So that's all very welcome. Capital taxes. So first thing to say was really not a huge amount changed. We were expecting something, and it really didn't. So that was great. That we didn't see any sort of increases that maybe we were expecting. So just as a kind of an update or a kind of reminder, the general rates at the moment are 10 and 20% on your general disposals. Slightly higher for residential properties, 18 and 28. And then you've got business asset disposal relief. Used to be entrepreneurs relief. So we've got a lifetime limit of £1 million on that. And we've got investors relief. So this is when you invest in unquoted trading companies. And there's a 10 million lifetime limit on that one. And again, it's a 10% rate there. The slight stealth tax that comes in here is that we are freezing Rishi's, not me, it wasn't me, is freezing the CGT annual exemption, so 12,300 to 25-26. So, again, we would normally see that increase slightly every year, and it's not going to. The big one I mentioned at the beginning of the presentation was that 30-day CGT window for declaring and paying tax on your residential properties. Has been increased to 60 days, which is good because nobody really knew about the 30 days, and it was a real struggle to get people to understand that they had to get this return in and they had to pay this tax within 30 days of completing on the sale of the property, and it just wasn't happening. So to give us that 60 days just takes the pressure off slightly. So that's great. Inheritance tax, from a capital taxes point of view, again, nothing's changed, but we are freezing the rates until 2026. So again, a bit of a stealth tax there, but that's what we've got. Then we got the recovery loan scheme. So this was due to end in 31st December. It's been extended for another 6 months to June 22, which is great. So up to December, you can get loans of up to 10 million, so 25,000 to 10 million. Now, so from December or from January to June, that limit is 2 million. So we're bringing down the amount you can borrow, and the guarantee moves from 80% to 70%. This is the government-backed guarantee. So in a way, what we're trying to do is move lenders back to a normal way of lending. So it's just sort of a tapering off of the government-backed schemes, really. If they're open to all businesses, whether you've had a bounce back loan, a coronavirus business loan, you can still have this, whether or not you can afford it. So whether or not business you'll get the lending because of affordability, that's probably another question. But it is there, it is available. You will pay interest, you will pay fees. There is no 12-month repayment holiday as there was with the CBILS. So it is all go from that point of view. But it is there, and we've got another 6 months of it for those that are coming out of the pandemic and really thinking now is the time that I need to invest in my business, and I do need some funding, $500,000, $1 million, whatever it might be. And the rates are capped at 15%. So great, it's not cheap lending, but it's lending all the same, and it's and for where there isn't other lending in the market, then it makes sense. Okay, right, and then we just sort of go on to other sort of matters in the budget. And I'm not going to go into great detail because lots of it is not particularly interesting. Tonnage tax to do with shipping fleets, landfill tax. Again, I'm not sure huge amounts of people are that interested, but effectively it's going up by the RPI. Gaming duty, new bandings being introduced. Vehicle excise duty, I mean, that affects most of us. And it's going up, surprise, surprise. I don't think anybody would expect anything different, to be honest. Tobacco duty increases. There we go. Alcohol duty. Well, there we go. There's a reform, and the government's consulting on that. And the idea is that you're going to pay duty based on the percentage of alcohol content rather than the product necessarily. And there's ideas of a simplification. I'm never sure that this government quite understands what simplification means, but there we go. That's what's in the pipeline for that. Air passenger duty. So it's going to be cheaper to fly internally within the UK. That's the promise there. Free ports. So they brought in some anti-abuse rules on that. VAT on second-hand cars. This is to do with Brexit, Northern Ireland, and sort of getting things up to date with that. And again, the second-hand motor vehicle export refund scheme, again around Northern Ireland and the EU, and just sort of getting all the ducks in a row there. VAT treatment of fund management fees, if you're interested in that at all. There's been a consultation on that. VAT penalties, that's an interesting one. They are starting on or after the 1st of April 22. So that's in line with all businesses who are VAT registered being required to be reporting under Making Tax Digital. And there's a new regime, a points-based penalty regime, which is going to be slightly fairer than perhaps the old system was. So if you're interested in that, then perhaps give me a shout. And then we've got plastic packaging tax, and that made some changes to that to do with the per ton cost, which I'm sure lots of you are excited by. And that really is everything that I wanted to go through. That is the budget in perhaps a bit more than a nutshell, but hopefully you found that interesting. Is that the word? I don't know. But hopefully you found it informative. And if, as I say, if there's anything in there that you want clarifying, that you want a little bit more information about, then please do get in touch. More than happy. My contact details are on the screen. More than happy to talk to anybody about any of that, or or any matter generally to do with accounting, taxation, or making tax digital, and the sort of transition to that. So so without further ado, I suppose that is probably me done. So thank you for listening, and goodbye.